Hi friends, welcome to Tax Talk. We are going to talk about real estate and JDA, that means joint development agreements here. I am CS Sunil Arora. We'll have a series of lectures on these two topics, real estate and JDA. Now, we all understand that real estate transactions in India are a little tricky. I'm not going into the details of that, but then for reasons which most of us are familiar with that, it's we have to be very cautious when we are entering into real estate transactions of any kind. When we look at joint development agreements, they are even more difficult to manage because of their complex structures. Because they are a little, the structure of a JDA is such that they are more prone to disputes or some sort of a problems subsequently. So JDA is a very important area, especially if we consider the fact that there's such large number of transactions in real estate development which are happening through this model of joint development agreements. It is not just small cases like we look at Delhi. Delhi, if you look at it, we have people who have old residential house. They enter into a collaboration or a joint development agreement where the old house is converted into 4 floors. 1 floor is typically taken by the builder, 3 are given to the landowner, and so on and so forth. This is a small transaction. We have large transactions where the landowner has maybe say 10 acres, 20 acres, 50 acres of land. And this landowner enters into a collaboration or a joint development with a developer. Now, this has its own different kind of challenges which need to be addressed. We have some medium kind of transactions also where the landowner has say 1,000, 2,000, 5,000 square yards. And it is to be developed into say 20 apartments or a shopping complex or a commercial building, whatever. So there are different sizes of collaboration or joint development agreements which are happening. So we'll be trying to address the different issues which are there in all these kind of transactions which are there. We have to also understand that the landowner may be holding that particular asset as a capital asset. There can be a possibility that the landowner is holding that particular asset as a stock in trade. It can happen a situation, capital asset to khair ho hi sakta hai, because most of the landowners would be holding it as a capital asset who are not into this business of development or land transactions or land trading or anything like that. But then we can have companies which have land which they had purchased themselves either for trade or for development themselves. But then due to whatever reasons, they don't want to get into development themselves and they want to have some other developer and they want to enter into a joint development agreement there. We have a lot of joint development agreements or transactions happening where agriculture land is involved, especially in the large land banks which are a little away from the city. We have agriculture land where a lot of transactions with respect to JDAs are happening. In addition to this, we have some very small transactions also. Which are a little unorganized, unstructured, where you have a local builder and a local person having a small piece of plot or a small residential house. He gets it converted. The transaction is not very well structured. They do not have a registered collaboration agreement. The builder or the developer develops the property. He gets the sale deed executed from the landowner itself. And whatever sale proceeds are received, he takes it from the landowner. So there are various types of unstructured or unregistered or regulated kind of transactions which are happening as far as joint development agreements are concerned. Now, when you try and understand the entire process, we are not just talking about tax here. We are talking of the entire process of this real estate transactions or a joint development agreement. It is very relevant here because unless and until we have that understanding of what is happening, it's very difficult to talk of only tax, and it is not really relevant also for that matter. Now, when you look at the entire process, you have to find the right developer. You have to negotiate with him, settle the commercial terms with him, look at the specific technical specifications. Then comes the question of preparing the legal documents, then treatment of taxation. So there are a lot of challenges when you are entering into a joint development agreement. Now, when we talk of this process of joint development agreement, the first thing which a landowner needs is a trust and confidence to enter into a joint development agreement. Now, you have to look at it from two different perspectives. We have professionals professional companies who are into this real estate business, they also enter into joint development agreement with other developers. They have the knowledge and the expertise. They understand the trade. They understand the various nitty-gritties which are involved. So they are still able to manage. They have the trust and confidence in themselves to do it. But then we have the other extreme also. We have a lot of non-residents. We have senior citizens. We have people who have no experience whatsoever in real estate. Now, even they want to enter into, if they have some land bank, even they have at times to enter into real estate transactions. It can be maybe a plain vanilla kind of a real estate transactions when you're trying to sell it, or a joint development agreement where you want the property to be developed together and you want to be a part of the ultimate gains which are likely to be there on account of development also. And it can not necessarily be by choice. It can be at times because of compulsion also. You're not able to dispose of the property as it is. So you have to enter into some development. You have to carry out some development on that particular property under a JDA. So that is another kind of a situation which is there. Now, in such situations, what the landowner requires is a hand-holding and a representation which is required. He needs a guidance and support to carry out the transactions from end to end. Now, as I said, that it is not just JDA. It is even if it's a plain real estate transaction, then also a person who's not very well versed, a non-resident or a senior citizen or a person who has not had exposure on entering into real estate transactions would require some sort of a help to enter and to manage that particular transaction which is there. Now, we have been involved in providing this end-to-end solutions to a number of companies and to a number of landowners as well as developers, where we have helped them structuring the entire transaction and then ensuring that it ultimately, till the time of completion of that particular transaction. Now, if you look at it, the entire advisory and consultation which is there with respect to a JDA or a real estate transaction, it can be entire process can be divided into some stages. First and the foremost is finding the right developer or the buyer for the property which is there. So with whom you are entering into a JDA, who's going to be a JDA partner, joint development agreement partner for a landowner, you need to carry out necessary evaluations and due diligence before you can entrust your property with him, because most of the time you'll find that the stakes are very high. I mean, the quantums which you're talking of are very high quantums. So in such a situation, you can't proceed unprofessionally and rely upon or bank upon in an unprofessional manner. So you need to have a proper process for selection of your joint development partner. Then you need advisory with respect to the commercial arrangements which have to be there between the parties. In a joint development agreement, there is some upfront payment. Then there are payments which are made subsequently. There is a revenue sharing model. There is an area sharing model. So, and then structuring that particular transaction also. That means it comes in the commercial arrangement as to how do you structure it. So whether you will have a separate LLP, whether you will have a separate company, there are implications for every kind of a structure or a commercial arrangement which needs to be looked into. Once you finalize this, then comes the next stage. And the next stage is you need to prepare the term sheet, the joint development agreement, or whatever legal documents have to be prepared. These are again very important. Now, even in case of small JDA, say if we talk of a Delhi property, it's a small residential house, say a 300 square yard residential house in Delhi. I'll share an experience with you. What happens is, a lady comes to me, she had inherited a property from her parents. Now, she was entering into a joint development agreement. So, JDA was given by the developer. Now, she came to me and she said that, I just want you to vet this particular document for us because we trust this particular guy. He's a good guy and will not have any problem. So, we just want to make sure that there is nothing legally wrong in this document. Now, I said, when we are looking at the legal documents, I'll enter into an arrangement if I have the trust and the confidence in myself as well as my JDA partner. But then when I'm coming to the legal documents, I have to vet it with the legal perspective, not keeping this thing in mind that either I have trust or confidence or how is that particular developer, I can't go into it. Let us try to understand the ground reality. अब वो ground reality क्या है? Ground reality ये है कि when you are entering into a joint development agreement, You are the most important person. The landowner is the most important person for the developer, because कुछ होगा ही नहीं जब तक आपके साथ JDA नहीं होगा. You are the landowner. तो तब तक तो आप बहुत important हैं. The moment you put ink on that particular joint development agreement, the priorities change. And what are the priorities? The priority changes is now the developer has to arrange for the finances, he has to get the clearances, he has to start the construction, he has to develop the property, he has to sell the property, he has to engage contractors and consultants. So the point is that you no longer remain a priority after this. The moment you sign a JDA, the developer does not have time for you. It is not just his preference. It is not by choice, but then he has to handle other things. So obviously he wants to get done with it and done and dusted with it. So he wants to do that. So, when we are talking of legal documentation, they have to be proper and self-speaking, and we can't have any considerations there. We also need advisory on the technical specifications and monitoring of the project. Now, monitoring a technical specification, of course, you understand, because there'll be specifications of the implementation or execution of that particular project. Monitoring of the project, there are twofold monitoring which is done. One is the technical monitoring, where you have a technical team, maybe a project management consultant or an architect or whatever. That is one kind of a team which is involved in this. And the second is the financial monitoring also. Believe me, we have had occasions where developers have entered into a joint development agreement, made huge promises, launched the project, collected the funds, and have disappeared. Now, I can give examples, I can give instances where they were such famous, and they brought in celebrities. When these projects were launched, celebrities were brought on board. And I'm not talking of only celebrities from Bollywood. We have had celebrities coming from all over the globe. People coming from Europe and US for that particular project, because the project was named after them. And thereafter, suddenly you find that the developer failed to fulfill its commitments and has disappeared, collected the bookings, and thereafter he has not completed the project. So monitoring of the project is very important. Once you have completed all these stages, in fact, the tax aspect is also relevant here. When you are structuring a transaction, when you are entering into the term sheet or the joint development agreement, you have to take care of the taxation aspects there. So we need to do the proper tax planning at this particular stage. In any case, there is tax advisory involved as far as such kind of transactions are concerned. When the landowner happens to be a non-resident and he intends to repatriate those funds or transfer those funds, remit those funds outside India, in such situation, you have the FEMA provisions also, and whether there are compliances with respect to tax as well as FEMA, which needs to be carried out. As we go forward, there is a mechanism we need to have mechanism for mediation, arbitration, as well as dispute resolution in the documentation which is there. The idea is to avoid litigation. As it is, we know the kind of problems which we have in litigation in our country, where the matter can drag on for years. The landowner's stakes are very high, because the moment the landowner enters into a JDA and the project goes into some sort of a litigation, he's stuck, because he can't sell that particular property. He can't have any other alternate arrangement. So he's stuck up with that particular litigation, which may at times take years to resolve. So the idea is that we should have sufficient built-in mechanism for a mediation, arbitration, as well as dispute resolution, where you need a consultant for an end-to-end solution. The first thing is that the legal document should be such, or the commercial arrangement should be such, that such kind of issues do not arise. So, prevention is a better form of cure. We all know that. So, first thing is to prevent that these should not happen. But if at all it happens, if at all the situation arises where you need some mediation or arbitration or some dispute is there, then you should have a resolution mechanism which can expeditiously resolve the issues so that you don't get into litigation. So we've given you an overall curtain raiser of the real estate and joint development agreement transactions which is there, and the various stages and the process which is there. We'll go into details of each and every stage and the process, and we'll discuss the various micro issues which arise in every stage and every process, including the tax aspect as well as other aspects. So it is not just providing end-to-end consultation with respect to the real estate and joint development agreements. We'll have an end-to-end discussion on this entire gamut of real estate transactions as well as joint development agreements. So we would love to have you in our future sessions also with us, and we look forward to having you with us for subsequent discussions as well. Thank you, and thanks a lot for being with us. Bye for now.